Hi, this is Aaron Sim and welcome to another series of investing. The topic today is, in this period of pandemic, is it better to invest short term or is it better to invest long term right now? Now the answer is depends. The most important answer is this: whether it's short term or long term, there are some fundamental factors. There are three fundamental factors that have to be taken into account. Number one, make sure that you learn how to invest in yourself, whether it's books, tapes, training courses. Investing in yourself first to know what exactly to invest. That's number one. Number two is to be able to learn to invest in coaching, mentoring in other people's experience so that you cut short your learning experience. You don't have to start from the beginning. You don't have to start from scratch and you can save time. That's number two. And number three is to be able to invest in relationship. For example, Warren Buffett and Bill Gates, they've been working together and helping each other for a long time. That's how Warren Buffett allows his money to invest in Bill Gates' charitable organization and do a lot of good for human beings. Okay, so three important elements is this: make sure that you invest in yourself, in your education, invest in other people's experience in mentoring, and invest in relationship, proper relationship that can help you to grow. Three very important. Now once you have mastered that, then I'm going to share with you about long-term investment. What's the power of long-term investment? Now imagine the concept of compounding. What I mean by compounding? For every dollar a day you invest in 66 years, okay, 0% a year will generate $25,000 at the end of 66 years. But if you are able to learn and discover how to create 3% interest a year, your money will leverage to 75,000 in 66 years. If it goes up to 5%, it goes up to $200,000. 5%, $200,000 in 66 years. It seems quite slow, right? But when that amount goes up to 10%, it's $2,750,000 in 66 years. Let's move further. 15% a year, that goes up to $50 million in 66 years. $50 million in 66 years. And if you're able to get a compounded interest per year of 20%, just 20%, that's $1 billion or $1 billion in 66 years. Think about the power of compounding. So you don't need to hit crazy amount of return. 20%, 66 years, $1 a day, $1 billion. Is that cool? Now, one of the best way to leverage on this investment is to use this concept called automatic savings. No cost automatic savings, meaning to put aside some money automatically on a weekly basis or monthly basis, but regularly, that you don't have to think about set aside. And this way, how much to put? 10% of your income. You receive salary of $1,000, 10% of that is $100. If you get $5,000, it's $500 per month, right? But put it aside 10% minimum automatically through bank transfer and let the money pile up. This is money set aside that you pay yourself for long term to invest in long-term investment. Okay, put aside that kind of money, don't touch it. Now, for example, so if you have that kind of money, what will be the long-term investment? Now, let me just give you an idea. One of the best way to look at is actually the stock market, specifically about the entire stock market, like Dow Jones 30. Dow Jones 30 largest company in US all into one. For the last 20 years alone, that rate has gone up to 163%. From Dow Jones ETF like DIA, Diamond, from $112 has now gone up to $223. That is 163%. Just investing in the ETF. ETF is what? It's a basket of stocks combined together. 30 largest companies in US combined, they make up this basket and you invest in it. Okay, just put it there at a specific time and go up to as long as you want. For the last 20 years, yes, the market go up and down, but it will go off threshold on the long-term basis. That's a long-term investment if you want to do that. Cool. Now people say, what about short-term investment? I want to make money faster. Yes, good to do a long-term, but at the same time, if you learn the skill set, you can do short-term. So what's the short-term investment vehicle? I'll highly recommend you take a chance to learn the power of options. Options are a financial leverage instrument that are derivatives of stocks. You derive money from stocks. So options, there are two types. There's a call option, there's a put option. Call options allows you to make money as stock price goes up. Say that again. Call options allows you to invest in such a way that when stock price goes up, the call option increases in value. So which means that for Dow Jones Industrial Average, maybe $200, you can maybe pay a few dollars to allow you to control that for a certain period of time. Okay? So that's a short-term investment. Put option on the other way allows you to make money when stock price goes up. Put option increases in value. It's like a protection that way. Okay? Now, how to do all these things? You need a little bit more education. As a matter of fact, next episode, I'm going to show you specifically how you can leverage a little bit of money and to make a lot of money from that on a specific time frame using options or even using ETF. That'd be good. Okay. Now before that, I want to just summarize this thing. Long-term investment, short-term investment, do both. Long-term automatic investment with the money set aside, 10%, allow you to grow. Remember, $1 a day in 66 years, you're a billionaire. Short-term, learn to invest in options because those are financial leverage, derivative on the indices or stocks. I'll share with you more specifically an example how you can leverage those things in the next episode. So if you like my presentation today, please like it, subscribe. I will give you further tips on trading. Share with your friends and turn on your post notification bell below so that you'll be notified of the next stock traders tips episode. There we go. I hope you enjoyed this session. Look forward to you in the next session. Go for it.